From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 13th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Today, the news calendar is relatively quiet. However, it is quite busy this week with monetary policy news Wednesday and Thursday out of several different countries. And we do have some events that could spur on some significant movement, and you'll want to make note of those on your financial calendars. So let's get started here on the USDCHF, the US dollar versus the Swiss franc. Looking at the daily time frame, we got a couple of different things that we want to make note of. Of course, previously, over a several-month period of time, we were in a downtrend channel. And I have that highlighted here on the chart with the red trend lines, the top red trend lines, the bottom ones. We can see the market bouncing around between them. Over the past few weeks, we saw the market push through the top side of that channel, making a false breakout so far. The market has moved back in the other direction, back inside the channel. So definitely at this point in time, the recent momentum has turned bearish here for the U.S. franc. So that's the direction we want to focus our energies on here for the day today. We also note that this week, early part of the week, we see that the Forex Black Book has turned back to red, which again implies some bearish momentum in the market. That doesn't mean the market can't turn higher again. It just shows us right now that the market has been bearish over the past several days. Let's go ahead and zoom it in a couple of times here on the chart, and you can see within a downtrend, we often want to look for opportunities to go short into resistance. Well, you look at this blue shaded area here, 96.70 to 96.90. You follow it back in time. You see a couple of places. Let me zoom out one time. A couple of places I have it circled with these blue circles where the market found support, resistance, support. And so now we know that this area, 96.70 to 90, is a significant decision point for the market. It's where buyers and sellers historically and factually have exchanged hands. Sometimes sellers exit, buyers enter, creating support. Sometimes buyers exit, sellers enter, creating resistance. So we know that this place is a place where the market will likely take some sort of trading action. So for the day today, as long as it's underneath that 70 to 90 level, I suspect we're looking for resistance. And only if it breaks above that blue shaded area do we look for a turn higher. So if we're going to sell in the direction of the most recent trend and momentum, then that becomes the place we look to go short and sell the currency pair. 96.70 to 90 becomes our opportunity, at least at the first part of this week, to go short. The risk, of course, is already highlighted for you. The risk is that it breaks back above that blue shaded area, goes higher. So your stop losses, of course, would be somewhere above that blue shaded area. That way, if it does break out, you could look to get out of the trade and look for a new opportunity. Targets for support, of course, are the pink shaded area, 9600 or lower for the U.S. franc this week. Moving on to the euro dollar, similar situation, just opposite of the U.S. franc over the past several weeks. Let me zoom out one time. We can see the rising uptrend channel. We can see that the market has challenged down there into that red trend line a couple of times now and bounced back higher. So the question, of course, of the week will be, or is it going to continue this rising trend channel or this rising trend along the red trend line, or are we going to see it turn back lower? Of course, monetary policy this week could be the influence for direction for the next several weeks for the euro dollar. So as we see it, it is rising along the red trend line. We're falling back down into it. Of course, I'd like to see the breakdown of that if we're going to see it go lower. But for the time being, I think we need to focus our energies on the upside here for this currency pair. Let's go ahead and zoom it in a couple of times. We see the previous downtrend, the blue trend line, the non-farm payrolls a couple of weeks ago causing the market to stir higher. And now we see it pulling back down into support. Take a look back here. We see support and some resistance. So we know that this area 112.25 to 112.50 is a significant decision zone. And we also have the 100 period moving average just underneath there. So for the day today, I suspect that this yellow shaded area, 112.50 to 112.25, will be our support. If you're looking to go long, this is the place to do it. Right here above the moving average, in the direction of the red trend line. All of that gives us a directional purpose for the upside today for the euro dollar. And really, only if you're going to go short, you would look for it to go back up into resistance at this point. That's all the way back up here towards this orange shaded area here on the chart. Let me pull that over a little bit. That's all the way back up here into the 1300 level. That's the only place it makes sense to go short at the current moment, is back at 1300. So we're still 35, 40 pips away from that, but currently the yellow shaded area is our support, and only if it breaks down through that yellow shaded area might we look for it back down into the mid to upper 111s, 112 level for the euro dollar. Moving on to the GBP USD, of course, this one has been significantly volatile over the past several weeks. We've had Brexit polling data, we've had all kinds of information, and over the next few weeks, we, of course, have the potential for that referendum to change everything here for this pair. So definitely watching the pound dollar as a pretty strong mover over the next few weeks as we see sentiment and momentum change maybe a couple of times before we get through that referendum vote in a few weeks. But anyway, back here we see the rising trend channel. The red trend line has been in that pattern for the past few weeks. We see the black box here range, went up into a black box here, into a range, and now we've broken back to the bottom side of that. So now we see the market pushing back lower again, settling down right now into support. 141.75, 141.45 is the yellow shaded area. That's your current area that the market is finding support. If you're going to go long, you're watching for clues to support and reversal. Take a look. Again, that pink shaded area down just into the mid 4,000s is where that first range develops. So we're getting very close to that. If you're going to go long, buying on dips into support and clues to reversal will be what you're watching for. If you're looking to go short, I just don't think right now is a great place to go short at the bottom of the downtrend. Let's go ahead and take this one down to the 4-hour time frame. Again, I think if you're going to go short, you want it to go up first. You want to go back towards the green shaded area, back up here into the mid to upper 4200s, 4240, 4265 is the green shaded area. That becomes a better opportunity to go short than it would be at the current market value. Of course, if it breaks down through the yellow zone, that may change our mind about it a little bit, but currently I don't think this is a great time advantage point to go short right now here for the pound dollar. It needs to go up before it goes down. Again, if you're looking for a reversal, this is probably your spot to do it. 41.75, 45. Looking for clues and evidence of reversal, may become short intraday opportunities to go long and target back down to the green, back up to the green zone for the pound dollar. Moving over here to the USDCAD. This one again has been back and forth over the past several weeks. We see the falling trend, the red trend line, the rising trend, the blue trend line, and over the past few days, a week and a half or 2 weeks, we've seen the fall back down into the 1.2600s once again. But now we see it rising once again, rising back up. Of course, oil prices influencing this currency pair. Falling oil prices over the past 2 or 3 days has caused this to rally back higher a little bit. We did see some news last week, some positive news out of Canada with jobs data that should have seen a little bit more of an influence of this to go lower, and it was very short-lived as we saw oil taking that fall as well late last week and this first part of this week. So very interesting here for the Uscad. So if we're going to see this to go down, we of course need to see oil rally again. That would probably be the first influencer that we need to see. If oil starts to rally, go back higher and challenge the most recent highs we've seen last week, then we'll look for this to turn around and start heading back down to the lows and maybe even making a new low. If oil continues to slide a little bit, we might see this continue to pressure back up into the mid to upper 2800s. Right now it's challenging this yellow shaded area. We've seen support, we've seen resistance here before. So if it stays above, we'll call it 127.75, the yellow shaded area, we could look for it to go back up. Again, that would imply that oil prices continue to fall. If oil prices rally once again, a push back underneath this yellow zone, 27.45, we'll look for a challenge of the lows back into the mid to low 126s once again here for the US CAD. Take it down to the 4-hour time frame. 4-hour chart is above 27.75, so I think that might be interesting for the day today, especially if we don't see any significant changes in the oil prices today. We could look for a little bit of a bounce, even back up towards the mid 28s today. Again, watching oil closely will be an influencer for your trading on this pair. Back underneath again, 27.45, back down towards 26.65 for the US CAD. Moving over to the US yen, this one challenging the historical multi-year lows. Take a look. Weekly time frame, we're looking all the way back to 2014 when the market was into these lows before, back here where the red circle is. So again, very significant level that we're at here for the US yen. Risk aversion causing this to pressure lower as well, the US franc as well, but risk aversion causing the franc and the yen to continue to pressure lower on these two currency pairs. You can see that this one continues to pressure lower. I would say take a look at the last time we were here, though. I mean, the market pushed underneath it, significant dip, and then all of a sudden reversed and went back in the other direction. So until we see a significant open and close underneath 106, I'm not really ready to say let's go short here on this pair. While it does look like it should be going short, I'm not ready to call it short until we get a significant breakout underneath this purple zone, really 106. So an open and close underneath 106 this week may give us some more downside expectation. The next place, multi-year low that we would look for the market potentially. Give me just a second. I need to grab that blue shaded area. The next place that we would look for the market to go would be down here towards the blue shaded area into the 105 level. Historically, that's the next area of support. So open and close underneath 106. Let's head down to 105. If it can't do that and reverses like it did back here where the green circle is, we might look for the market to start rising back higher. I would suspect that monetary policy, FOMC this week, may be something to watch for the US yen. There is some news out of Japan as well this week. Let's take a look at the AUD USD Australian versus the US dollar. Of course, we've seen a couple of different trends here. The red trend line, the rising trend, blue trend line, falling trend, and in the most recent time frame, we see a new rise here for the Australian dollar. If it's going to continue that upside, we want it to find support and start to rally from those support levels. If it breaks lower through support, then we look for it to continue to go back down again. Let's go ahead and zoom it in a couple of times here. We are into support. The blue shaded area, 7370, 74000 is our blue shaded area here. And our current area of support, look back to the left. You see resistance here. You see some resistance here with the red boxes. So we know that that area 7370 specifically is likely to find some support. Rallying from here back above 7400, I think we're back into the 7465, 7495 level as resistance into the orange shaded area. If it breaks down through and underneath 7370 and we start to see some bearish momentum, next area for support is not too far away. 7330, 7310 is the purple shaded area right here. So definitely watching this currency pair. Again, oil prices may be an influencer for this pair as well. If oil prices start to rally, we could see this start to rally as well. Just the breakthrough 7400 will be a necessity if we're going to see it go back up into the mid to upper 7400s here for the Australian dollar. 4-hour time frame, we do see some hope of some bullish momentum pulling back in here to the market. Above 7400, I think, becomes our next area that we'll look for a breakout and continuation higher. Again, open and close back underneath 7330. Or sorry, 7370 heads back down towards 7330, the purple shaded area. So definitely watching this pair and keeping an eye on oil prices and see what they do for direction for the Australian dollar. And one last currency pair, the Nzdusd. Of course, significant rallies here last week. A significant profit made here for us last week on buys from early on in the week. I think this week we're looking for something very similar. We've seen the dip back down into support, into the purple shaded area, 70.50 or so. 70.80 is the purple shaded area. If it stays within and breaks back above 70.80, we'll look for it to go back up towards the recent resistance highs into the blue zone, 71.50. A breakdown of 70.50 underneath the purple zone may look for further pullbacks for this currency pair. 4-hour time frame, again, we saw it push a little bit underneath the 70.50 level, but remember, it didn't do it on the daily time frame. Back above 7,080. We're back into the recent resistance highs. But definitely some interesting things happening here with the push underneath 7,050. If it gets back underneath there, I think we might even see it turn back down towards the 69.80 level, the orange shaded area. So watch this area right around the 7,050. Staying above it, getting above 80, we begin working our way back higher. Getting back below 7,050 could be our clue that it's going to head back down towards 69.80 for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.